Good afternoon, everyone, and welcome to the Daily Volatility Box Report for September 18th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we'll first start by talking about yesterday's CME FedWatch Tool expectations. So yesterday when we made our video, we saw that the expectations of a rate cut versus no rate cut were 50-50. And essentially monitoring those throughout the night and into the morning, that had once again shifted back in the direction of what we had expected headed into yesterday, at least, of being 75% in that, or 70% rather, of a rate cut, and then 30% no rate cut. And we had expectations come out, which essentially is how we were able to play the first moves in the indices using the aggressive volatility box. And then we had free information, so to speak, which we'll talk about, which was then our sign to switch on over to the conservative volatility box, where we had two more moves. So 3 moves total, 2 were winners, 1 were losers, and this was across the board in the S&P, the NASDAQ, the Dow, and the Russell. The P&Ls for each of those were relatively nice. So for the S&P with 2 contracts, we had a positive 1250. For the NASDAQ, we had a positive 1980. For the Dow, we had a positive 1500, and the Russell was a positive 1275. We also had one trade set up in the crude oil futures, and this wasn't when the inventories report came out, but it was actually a reaction after that. And we'll talk about how we used our trade plan to follow the rules and play this trade where we were able to have one trade which hit both our T1 and our T2 targets. For the day, we had a total of 13 trades. We had a total win rate of 69.2%, and our total P&L for the day was a positive 6,785. Okay, and one quick announcement. So tomorrow there will be no daily volatility box video, and we'll cover any trades that take place tomorrow in Friday's video in that report. Okay, so let's get into charts. We'll start with the crude oil trade first because I think that's the easier one, and then we'll cover all of the indices. And so as part of our trade plan, so let's pull that up, we have a section in which we specifically talked about crude oil. And in it, we say for the aggressive trader, you essentially start looking at how crude is behaving starting the 4 a.m. Pacific time. So essentially a couple hours before the crude market opens to start to see whether or not we're respecting the aggressive volatility box or not. And so here we have the aggressive volatility box plotted, and we see that in the morning hours, so starting 4 a.m., we respected, but all of a sudden in that hour before crude opens, we broke through the volatility box. We see that happening in this candle right here. And that was our sign to play the reports and any of today's activity using the conservative volatility box. And so switching on over to the conservative volatility box, according to our rule set, we see that in the first hour, we still respected the entry lines of crude oil. We didn't breach either side. So that was good. And our entry came to go long when we had crude fall right here. And our stop was outside of the volatility box where we gave it 25 cents of room. Our first target was the 25 cents. And our second target, which was hit, was 53 cents. And we ended up going to 56 cents in this candle. But we barely essentially grazed our T2 line before we then started to dwindle back down. And that was our one trade in the crude market. Now let's head on over to the indices, and we'll start with the S&P. But the trades are really the same, and our approach in all 4, we'll quickly cover them, but we'll go a little bit more in depth with the S&P chart. So we'll start with the aggressive volatility box because that's what we were told to do given our morning's trading activity. So we draw our entry line and we check to see whether or not we breached either side's aggressive volatility box entry lines. We see here that we very clearly hadn't, and that was our sign to continue to use the aggressive volatility box. And we kept monitoring the bonds as well. And the bonds were also respecting the aggressive volatility box headed into the FOMC event. And so back to the indices we go. Okay. So one thing that I'll quickly point out because I thought this was interesting is this is the chart of the full-size S&P futures contract, and headed into the FOMC event, we see this rise up. Now if we pull up the same chart but with the micro futures, we had this massive wick right here in that same period leading into the FOMC event. And so that was just an interesting observation. If you're trading the micros, this is something that you might have seen today, which was interesting because that did not occur on the full-size contract. Anyway, so now with the FOMC event at 11, so unfortunately we did not catch the first trade. or the first trade that's set up was an actual long where we had our initial reaction where we hit the aggressive volatility box's cyan lines, and we quickly hit both I think a T1 and a T2 in the next candle right away, giving you that fade. We unfortunately did not catch the first trade on any one of the indices. That happened way too quick for us. We were still getting our orders in place for that beginning of the hour. Did not expect that reaction to happen as quickly. And by the time it happened, we had essentially hit T1, which then made any entries when we came back down invalid. And so we missed that first trade, but we did catch the second trade in which we had an opportunity to go short. So we had the spike down, and at that time, the aggressive volatility box was plotted right here, and we had the ability to go short with our stop outside of the volatility box clouds. And at that point, that stop was 8 ticks wide. Our first target was the 8 ticks, and our second target was at the target line, which was 10 ticks. And we hit both T1 and T2, and we ended up having this flush down. Now, once again, the trade to go long is no longer valid because we had already hit our T1 and our T2 from that first opportunity. And once again, per our trade plan, retests are not valid. And so here we had the ability to sit back and absorb this price information free of charge. We didn't have to put any capital at risk because that was against our trade plan, but we saw that we started to break through the aggressive volatility box clouds, and that ends up becoming our sign to switch on over to the conservative volatility box. And so now once we switched over to the conservative volatility box, we then had our second entry to go long as price came into our conservative volatility box, which is outside of the stop of the aggressive volatility box. So a whole new entry altogether using a different set of models. And so our entry came to go long right here using the conservative volatility box, which some of you who I think wanted to play the FOMC event in a conservative manner had emailed us asking, is it okay to just stick with the conservative box? And the answer is absolutely yes, right? You have to stick with what adapts to your risk tolerance. And so for those of you who played only the conservative volatility box, this was your opportunity to get long. And our stop was outside of the volatility box where we gave it 8 points of room. Our first target was the 8 points. Our second target was 13 points, both of which were hit. And so that trade gave us our T1 and our T2. And our last trade of the day came where we had an opportunity to get short using the conservative volatility box now, where our opportunity came with still enough time left into the market where we thought we might get that reaction that we're looking for. Our stop was 7 points outside of the volatility box, and our target was the 7 points. We didn't hit our stop technically, but we ended up getting out into the end of the day for 7 points. Okay, so let's switch on over to the NASDAQ chart, and we'll just show you that it's a very similar story. We won't go through point by point because that's a little bit tedious, but we see the same sort of story here, right? We missed that first entry. That's okay. We still have our second opportunity to get short. We ride this move down. We see that free information, which then tells us we're starting to trade outside of the aggressive volatility box, and we switch on over to the conservative. We have ample time to get in. Almost the entire hour, actually, we had opportunities to get in. Our stop is outside of the volatility box. Our first target we have is 25 or 27 points, and our second target is the 46 points. Both targets are hit, and we have our second entry to go short into the close. And on the NASDAQ, we do exceed the volatility box, and we actually do stop out, which is one of the reasons why we ended up getting out of the S&P at the end anyways. But the NASDAQ, the third trade, ends up being a stop out. Moving on to the Dow, same story. So this should be this is the story of the day. And this is how aggressively we played the volatility box. And if you played it conservatively, you had this first less trade that we talk about in which we miss our first entry, but we have our second entry using the aggressive volatility box. We're able to ride this move down, see free information once again, use it to switch on over to the conservative volatility box and play this move up for 65 and 122 points respectively. So T2 was 122, T1 was 65. We then have our second opportunity to get short, and our stop is hit outside of the volatility box right here. And so we're stopped out of this third and final trade, giving us 2 successful winners and 1 loser on the Dow. And finally, let's talk about the Russell. So the Russell, same story right here. Missed that first trade across the board. This all happened way too quick. So unless you happen to have just had your orders ready to go at the 11 o'clock mark across the board, which I think is pretty hard to do, you would have missed that first trade, which is okay. But that second opportunity is the one that we ended up taking, which we had plenty of times to get our orders in and ready for. And so once again with the Russell, we had an opportunity to get short. Our stop was outside of the volatility box, and we ended up hitting our T1 and our T2. We get some free information where we see that we're starting to trade inside and out of the volatility box clouds. And that's our sign to switch on over to the conservative volatility box, where once again, plenty of time to get in, and our stop is outside of the volatility box, and we end up hitting our T1 and our T2, which then takes us into the third and final trade of the Russell, where we actually had an opportunity to get out at break even into the close. And so we ended up taking that while we saw that the NASDAQ and the Dow stopped out. And so that final trade in the Russell was just a +0 break-even trade. So to sum up today, we had a lot of trades set up. We had 13 trades set up using at least the aggressive method. And if you used only the conservative volatility boxes, you had 4 less trades. We had a total win rate of 69.2%. And we were able to end the day up plus 6,700, a little bit more, 6,785, which now helps us get into the positive column for the week after being negative Monday and Tuesday. So we'll take that. Let's see what Crazy Thursday brings. Once again, just as a reminder, there will be no volatility box video tomorrow, but we'll cover any trades in Friday's activity or Friday's recap video. We hope you guys have a very successful trading day tomorrow. Congratulations to those of you who had profits. A lot of you emailed us excited with how the day turned out, even playing it conservatively. So kudos to you. Celebrate your profits. Protect your profits headed into the week. And let's see what Crazy Thursday, at least the reputation that it's built up, brings us tomorrow. And if we can start to close out this week on a really nice run. All right, take care, everyone. See you tomorrow.